Howdy, folks. This isn't going to be a fun video for me to make. I mean, this is going to be a hard reality to bear, but if you can stomach it, look at yourself moving forward and adjust accordingly, you're probably going to come out of this relatively okay. But particularly, I'm talking about real estate. Why people are taking these broad few numbers, acting like it's really not that bad. I'm seeing people like Dave Ramsey do this, and I don't think it really adheres to the individual situation, more particularly my parents, the stuff that we're currently dealing with within the real estate market. Now, many of you know this has not been a fun couple of weeks in the markets. I mean, just generally the stock market seeing this kind of drop in these AAA rated companies is very unusual, to say the least. Usually these are great buying opportunities, but what this is going to do is have ramifications across the entire scope of the market. And the last domino to fall, as many of us are aware, is real estate. So we're going to be talking about the Ontario, Toronto real estate area where I particularly live. But first and foremost, many people might not look into this, but there are a staggeringly low number of young homeowners in Ontario. Millennials, below millennials, more than 70% of them are part of the renters nation here. All of us are just primarily renting, trying to come up with a massive down payment on $1 million property, which was the average cost of a home in Ontario, what I think is going to be the peak. But just taking a look even farther, this obviously with inflation, people having less money in their investment portfolios, and then slap on that the average Toronto rents are up 20% year over year in May, just continues to solidify that last nail in the coffin for my generation. Realistically, this isn't fun. I know I've been saying this a lot, that you really kind of need to be frugal in this environment, come up with any dollar you can and continue to cost average into the markets, or try and start looking into real estate, because this is where people start making generational wealth. But you start realizing how hard that becomes when layoffs start happening, jobs start slowing down, and this truly becomes a real recession, right? And this also leads to why all these new studies are showing 47% of Canadians are living paycheck to paycheck. Again, the data is leading us in a direction, and it really reminds me of Jamie Dimon, the CEO of JP Morgan, when I was showing some videos of that a week ago, really talking about you can really see a hurricane kind of just formulating on the horizon. And when this thing comes to shore, it's going to hit. We know it's going to hit right now, but how bad it's going to hit, nobody can really quite be sure if this is going to be one of the most severe drops in the market we've ever seen, or we're going to get the historical 30% drop followed by a recovery in anywhere from 1 to 2 years. Nobody really knows how bad this is going to get, right? But let's just talk about more particularly this broad view perspective that a lot of Canadians and realtors kind of throw in my face, a lot of financial advisors, and I hate it. I really personally hate it. But this is coming from the CREA, the Canadian Real Estate Association. These are numbers people follow religiously because, again, it gives full insight into what's going on in the real estate market here, particularly in Ontario. But the national home sales fell by 8.6% on a month-over-month basis in May. So month over month, we're seeing this real big cooling off period of people just rushing into buying homes. This gets new realtors really on edge. I mean, if anybody that's been a realtor in the last 2 years has been really happy because they only have to do one showing and the house usually sells, but now they're going to have to show multiple homes to people. People aren't going to be in a rush to buy. This really kind of puts them on edge a lot right now. The actual monthly activity came in 21.7% below the May record set in 2021. So year over year, volumes dying up by 21%. The number of newly listed properties was up by 4.5% on a month-over-month basis. So you're seeing this kind of tangent of an increase of people realizing that, damn, this might be the most amount of money I'm going to get for my property. Might as well get out of it. At the same time, people are like, maybe we'll just wait. So we're seeing homes hit inventory increase and buyers drying up here, right? Now, the MLS Home Price Index edged down 0.8% month over month, but was still up 19.8% year over year. This is really intriguing, right? Because this means that real estate year over year is still up. That's a good sign, right? But the actual national adjusted average sales posted a 3.4% year over year gain in May. So when you look at this, you might think to yourself, well, real estate's still up. That's what everyone's saying. Real estate can't crash that hard. There's, the markets really haven't changed that much, but I'm going to show you how much realistically they've changed on an individual basis, because depending on where you live, these averages mean absolutely nothing. They mean zip zero, and we are talking about full calamities in certain aspects of certain markets. Now, these are the GTA average price change, all dwelling types combined from February to May. This is merely in a 2-3 month period, barely a quarter. And it is pretty dramatic. Now, first and foremost, Toronto, which I think is going to inevitably get hit, has been boding very well. Now, don't get me wrong, I don't want it to get hit. I mean, I have exposure to real estate investment trusts that have large development properties and a huge amount of tenant bases within Toronto. So, I mean, that's good for those REITs that I own. But at the same time, I just don't see how Toronto is going to scathe through this without getting some kind of collapse or some kind of correction when we take a look at the rest of the surrounding Toronto area. And keep in mind, most of these places are anywhere within a 20 to 40 minute drive of the downtown core of Toronto. We'll start here with York Region when we're talking about Aurora, East Gwillimbury, Georgina, King, Markham, Newmarket, Richmond Hill, Vaughan, Stouffville. I mean, Stouffville is a mere 30-minute drive on a no traffic day coming from the downtown core of Toronto, and the real estate has corrected by 23.8% across York Region. You're looking at corrections anywhere from 15, probably on an average around 15 or 20%. Halton Region, guys, similar ordeal, a little less hit than York Region, probably about a 10 to 15% correction. Peel Region, Brampton, Caledon, Mississauga. I don't really think about those places. Oshawa, Brampton, Mississauga, they're like the armpits of Toronto. They're both on those side areas. They're seeing corrections anywhere from 5 to 15%. Durham Region, where I particularly live, where my parents live, where they're dealing with a real estate deal right now that has just become an absolute calamity, which I can't really talk about, but consider subscribing because maybe down the road I'll talk about our own personal real estate dealings. But Durham Region, guys, Ajax, Brock, upwards of 13%. Clarington, Oshawa is kind of surprising, being down 23.2%. Pickering, 15%. Scugog, 26%. Uxbridge, 18%. Uxbridge is 20-minute drive from where I live, and it's crazy not only how bad they got hit in that weird hurricane weather we had a couple weeks ago, but at the same time, seeing real estate, these $1 million homes drop by 20%. Pretty staggering for anybody that bought in February. Whitby, down 23.2%, right? Whew. And then when we get out into the Simcoe County, and this is way off into Farmlandville. I mean, Durham's pretty Farmlandville, but Simcoe County, Dufferin County, very open, wooded areas, and these places are ranging dramatically from anywhere from 3% to upwards of 32%. This has to inevitably hit the Toronto market. Maybe Toronto just has that much demand out there that, people are still able to buy. But when you're seeing such volume dry up in crypto across the general large cap investment, the horizon here. I mean, it's insane how people aren't going to be in a rush, in my opinion, to just go jump into a piece of real estate when realistically waiting 6 to 12 months, seeing how much interest goes up in this inflationary market, which will continue to hinder those prices into the future, you might as well just wait. And I don't know how that's not going to inevitably bleed over into the Toronto market. So like I said, I'm not happy about this by any metric. It's just crazy that this is the market that we're currently experiencing. And I just wanted to make this video just to kind of offer a little bit more clarity, because again, I listen to a lot of financial guys and they really just keep touting that things aren't that bad in the real estate market, but it is a storm on the horizon and it is continuing to drift ashore here. And again, how hard is it going to hit? I'm going to pass that question off to you. I want to know what you guys think. Do you think we're going to get through this relatively okay? Do you think we're seeing perhaps parts of the worst aspect of inflation and interest rates, and maybe in the next 6 to 12 months we'll get to the other side of this as fuel prices start to adjust and inflation starts to cool off? I'd love to know how you think we're going to come out on the other side of the storm, because I feel like we're in the eye of it right now, and the tailwind is where we're going to see the real destruction or less destruction. But coming out of this, looking for that brighter sky, whew, man, I am very intrigued. This is going to be a financial lesson for all of us, but let me know what you think. Stay cool, stay awesome, and as always, I look forward to catching you in the next one.